It is the first anniversary of the fall of Credit Suisse. It will soon be history because UBS will now completely take over all the departments of Credit Suisse. The failed major bank of Switzerland, which was a major bank, is being absorbed by the rival UBS. And for the currently euphoric financial markets, this has actually not been an event at all. But this should not be taken as an isolated incident and it cannot be taken lightly. It was the first major global systematic bank and an important bank to go bankrupt since the global financial crisis of 2008. Now, last year's failure of Credit Suisse, as well as a similar bank, which was a smaller bank, but it was a very important bank, which is Silicon Valley Bank in the US. Both these banks' failures showed that the authorities still couldn't cope up well in such situations. Now, the regulators of the world need to realize that banks matter to the stability of system. In case of Silicon Valley Bank and Credit Suisse, the case is much bigger and more fundamental reasons need to be drawn from it. It reveals that there have been flaws in the implementation. Firstly, there is no institution which is too big to fail. This is the first lesson which you should understand. There is no such institution which is a safe haven investment on a permanent basis. If there is capital mismanagement and integrity flaws, the biggest of the big can fail and go bankrupt. The run on the wealth management unit of Credit Suisse affected pretty much everything. The liquidity run, what we call, affected Credit Suisse as well as Silicon Valley Bank. The apparent problem is not the liquidity run, but the apparent problem is why the liquidity run happened. It happened because of the reduction in the goodwill. The scenario could happen elsewhere also. This is lesson number 2. This is precisely what Warren Buffett says time and again. It takes 20 years to build a reputation, but only 5 minutes to ruin it. Once your goodwill or reputation is at stake, there will be liquidity runs for sure. One might argue that the Credit Suisse crisis was solved over one weekend. UBS just took them over and markets opened on Monday morning without a fuss or a ripple. And the taxpayers did not end up bearing any cost. But that is not apparent yet. My first thought after this, what will be the plan if ever one day UBS fails? There is no bigger bank left in Switzerland to take them over in the way they absorbed Credit Suisse. What happens then? This brings us to lesson number 3, which is a very important lesson, which is the basic fundamental financial lesson, financial discipline lesson. And it applies whether we are a big institution, government, or like individuals like you and me. The basic financial discipline calls for having more assets compared to liabilities. And when that safe buffer of difference reduces, one should not use fancy financial jargon or engineering words or excuses, but to hit the problem directly at the right time before it's too late. Never slide the garbage under the carpet. Just pick it up well in time and throw it away.